Hi, everybody. This is Patrick Zielbauer from Infinity Futures. It's 3:25. Let's go ahead and get the ball rolling with the presentation, and we're going to start with some risk stuff here. So let's go there first. All right, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. For those of you who are newer to this presentation, my name is Patrick Zielbauer, and that's me there on the screen. And every Monday, we do a presentation that focuses on some aspect of a very popular charting program that we offer and support here, which is called Sierra. Okay, Sierra chart. So the way that this works for Infinity clients is that if you have an account with us, that we will waive the fee that we would otherwise charge for Sierra, which is $19.95, by the way, if you complete 10 round trips in a 30-day cycle. So it's a little cheaper than if you were to go to Sierra directly. We also do exceptional support for Sierra, in our opinion, the best. And if you do a little bit of trading, you're not paying for the charting at all. So it's very inexpensive to maintain an account here at Infinity, even if you're minimally active. And so what we try to do is every Monday, we talk about some aspect of this charting program. A lot of times these presentations are driven by clients who come to them every week or people who submit questions. A lot of times they're driven by, if we as service people are hearing things from our clients over and over again, or in aggregate, all of the customer service people in our office are hearing the same thing from people, we might start to try to do a topic that sort of aligns with that. So it's very client driven, and we welcome you to this event and subsequent events as well. You're welcome to attend as many as you like. And I should also mention that anybody who's got a demo or a live account can have access to the chart files that we create. So we do archive the presentations. We keep the charting files that we create during the presentation. So if you want a copy of the charting file or files that we make today, then please feel free to request that from your representative in our office, and we will get them to you. Okay. So we're going to get into it in just a second. There's one thing I wanted to ask about first, though, and that is this. How many people who are in the presentation today currently trade equities and don't yet trade futures, but are interested? So how many people here would consider themselves a stock or option trader, and you're trying to get into futures a little bit and just sort of dipping your toe in the water? Does that describe anybody in the presentation here today? If it does, let me know. I'd be interested to hear that. Okay, seeing some answers come through. Okay, understood. Most of the people who end up trading with Infinity come from the equity or option space. There is a natural transition that tends to occur there. It's not instant. It's not for everybody. There is increased leverage in futures, and that's something everybody should be cognizant of. But we're always, curious to see where people are coming from. All right, so let's go ahead and get to the charts. I'm going to keep these tabs up here on the browser because I'm going to post all these links later. They're important, and I want everybody to have access to them. So I'll minimize the browser here. We should just be left with my main screen, which is just showing, one giant chart of the E-mini S&P with this numbers bar study. We're going to talk about this. All right, so in this presentation, what we're going to do is sort of walk through the process of building what is commonly referred to as an order flow style chart. Some people call it bid-ask volume. Some people call it volume delta. There are a million ways that this sort of chart is described. Some people call it footprint style charting, which is based on another charting program out there that has done a lot with this style of trading and arguably pioneered it. But in Sierra, we call the study numbers bars. And so if you were to have a blank chart, let me get us to our studies window here, with nothing on it. Okay, I'm going to remove this and just push apply. This is a 5-minute chart of the E-mini S&P. And all you do to get the ball rolling here is add this numbers bars study. Numbers bars right here. So just right click, go to studies, select it, click the add button, and then push the apply button at the bottom of the screen, and you're going to get, the chart is going to give you a visual response that looks like this. All right, now what I'd like to do is explain a little bit about what we're looking at, and I also want to comment a little bit more anecdotally about my experience with this type of charting and the customers who appear to be interested in it, because I think it has some pitfalls, I think it has some advantages, and I want everybody to see this as objectively as possible, okay? One thing that I've learned by being on this side of the business is that when you start hearing from customers or prospective customers about a style of trading, that means that the educational community is catching on. And we start to get calls, Patrick, I'm looking for the, magic bean order flow study. It's for sale on this other program for $6,500. How do I make it in your program? All right, that's when you really want to become wary of a certain method of trading. It just means that it's being pushed by the educational community. So you're getting videos every night in your email. You're getting chat room, advertisements. You're getting blasted with these very pleasant sounding emails about profiting and that sort of thing. Just be very conscious of that. This is a hot thing right now. So it's going to be attractive. It's going to seem really, really intriguing and interesting. And it is interesting, but it's just another way of looking at the market. And I don't necessarily think that people who trade this way are necessarily better traders. They might be, advanced in their ideas of the market, or, they might be really interested in the inner workings of how orders are matched up and aggressive, versus defensive fills and all kinds of stuff. We're going to try to cover some of this, but at the end of the day, it's just another way of looking at things. And there are weaknesses and there are strengths to looking at the market this way. And I just want everybody to stay even keel with the way that they approach this, because it's just another way of looking at the market. All right. The general idea, with this style of trading is to be able to look at the amount of contracts traded at a given price and use that information to make determinations about the direction of where the market is going next. Right? That is an oversimplification of the idea. There's probably some people going nuts hearing me say that in this room, but at its core, that's what it is. Now, from there's a million different ways people delve deeper into it. They will separate the volume done on the bid versus the volume done on the offer. They will be looking for just the delta, which is the difference between the two. We're going to cover some of these things here, but the point of this exercise today is just to show you how you can build the chart like this, and also to show you, as I alluded to in just the prior comment, you don't need necessarily to go out and buy this stuff right off the bat. There are some really good tools that people have built for Sierra that have order flow capabilities that are actually relatively modest in terms of pricing. So I'm not saying don't buy anything. What I am saying is don't go pay 10 grand for the magic order flow class. Okay, it's probably not going to get you anywhere. All right. So when we get to this point here, what we're basically looking at by default is a chart, and I'm going to zoom us way in so we can really see, the numbers here and see the colors. Is what this shows by default is the number of contracts that were traded at each price. All right, RD, right click, studies, and add the numbers bars study. All right, don't make any changes, just add it. It's going to look like this. Okay, so what we're seeing by default is the number of contracts that were traded at each specific price level. All right, we're not separating any bid-ask volume or anything like that yet. We're just showing you the number of contracts that are traded. What you will notice is that the shading of the colors is different when there are higher numbers of contracts or lower numbers of contracts. It's all shaded based on the number that you see at a given price level relative to other numbers in the other price levels in the same bar. If you were to right click, go to studies, and you were going to go to the settings section, which we're going to be doing that a bunch here today, you will see the color scheme. And what you will basically see is a range 3 up color, which is a really bright green, and then a range 0 up color, which is kind of like a more muted green. Let me get off that so you can see it right here. Then on the downside, you will see a range down, which is like a darker green, a darker red, range 0 down color, and then range 3 down color is this very bright red. So what you're basically seeing is a more intense bright color when more contracts are traded at that price. So again, if you were to make no changes, this is basically what it looks like. And what you'll notice is that, as an example, in this bar prior to the one that just opened at 5, you see 1,744 contracts traded at the 330 bar. That's why this price is so much brighter than everything else. Okay, it's basically, I guess the short way to say it, and we'll get to this briefly later, is this, the way that the settings are by default is this is basically 300% bigger than anything else we see. And that's the reason why we're getting that bright green color. All right, and those colors can be adjusted. They can be removed altogether. You can make it so that you don't see any price levels except for just the really, the really extreme ones. So, and you can also change those comparison thresholds as well, because remember, this is all relative to the bar that we're in right now. Okay. All right. Now, the most common thing, and here's what we're going to do for structure for this presentation, which I expect to last about 30 more minutes, is I'm actually going to keep this file as a default, and I'm going to open a new chart book, file, new chart book, and I'm actually going to copy this chart into the new chart book, and we're going to work off of that. So what's going to end up happening here is we're going to have a progression that starts here with our default, and then every one is going to get a little bit more added on until we have all of them done. And then we're going to send out all those files to anybody who wants them. So we're going to go piece by piece. All right, now the next thing that most people comment on is, all right, thanks Patrick for showing me how to get the volume in here. But what I really care about is either the delta, meaning the difference in the bid volume versus the ask volume, or I want to see those numbers separated. Okay, so what I will first do is right click and go to studies. And you will notice in the settings section, the very first choice here is called column 1 numbers bars text. For some reason, the ability exists in this study to have 3 different columns for every candle. That is overkill. I have never one time in my entire career ever changed anything in column 2 or column 3. Basically, it's like having 3 candles for each time period. All right, just way too much information. You could argue that there's way too much data here already. So what I would like to do is just focus on column 1. All right, ignore column 2 and column 3 for now. And the very first choice is the most important, and that is this one that says volume. So right now, volume is being displayed at each price level. You have the ability using this drop-down menu to change the display. The most common is for people to change this to the bid volume versus the ask volume. So if I make that change like this and push apply, you're going to see a visual response from the program that now separates the volume done on the bid versus the volume done on the offer. All right, so volume done on the bid versus volume done on the offer. Furthermore, I'm going to right click and duplicate this chart. Right click, duplicate chart. I'm going to use the window menu to tile them next to each other. Now we've got 2 right side by side. On the right-hand side, we're going to take it a step further, and we're going to go to the second most common request, which is just show me the difference. Just show me the difference between the bid and the offer volume. That is right here, which is called the ask volume, bid volume difference. I'm just going to change that, push apply, and you can see now we're getting different values, some of which are positive and some are negative. All right, so here's a way to sort of mentally correlate these. On the left-hand side here, see how there's 1,620 contracts done on the bid and 124 done on the offer. All right, so if you look over at the same candle on the right-hand chart, it just says negative 1496. Okay, negative 1496. That is the ask volume, 124, minus the bid volume, 1620. So what you're seeing on the right-hand side is only the difference between the bid and the offer volume. It is not, the total. So why do people even care about bid or offer volume? So bid volume, and again, this is also a bit of an oversimplification, but think of it this way, is the bid volume is volume done when you hit sell market and you just say, get me the heck out, or if you just say, I want to get short right now and you hit sell market, that is a bid trade. That is you accepting whatever the current bid price is, doesn't matter what it is. You're just saying, I just either get me short wherever, or I'm long and I'm getting my you-know-what kicked and just flatten me out and sell me out at whatever price. You are accepting the bid price, whatever it may be. That is a bid trade. Conversely, an ask trade is the opposite. You're trying to buy the market either at the current market price, or you are short and you're saying, all right, you know what, just buy this back. I'm too much pain. And you're accepting whatever the current ask price is. That is an ask trade. The general idea with this style of trading is, or analysis, is that if the market is getting a lot of activity on the bid, that is usually bearish. Okay, again, an oversimplification. Conversely, if the market is getting a lot of activity on the ask, that is bullish. Okay, that means that the ask is getting hit hard. It's getting hit way harder than the bid is getting hit. All right, so as an example, if there were a huge buy program or automated system that came in and started buying 500 E-mini S&Ps at the market every 3 seconds, you would be seeing a ton of activity on the ask. Now, what does that mean for you as a retail trader? Well, there's a debate there. All right, so one might suggest that that could be a hedge fund or something that is getting blown up and they're just trying to get out because they were too wrong. All right, it could be that there's an automated trading program out there that thinks the market's going to run way higher, so it wants to get long right now. You know, that's the kind of trade you would want to catch. You know, you would want to catch with or ride along with, right? But you don't really have a way as a customer or anybody to be able to understand or know why they are getting in or out of the market, whether it's them accepting a loss or it's them, you know, trying to catch the market as it rallies higher. All you can see is the data. Okay, the bid volume versus the offer volume. So in the order flow community, generally speaking, what people are looking for are certain deltas to be reached, whether they're positive or negative. And the delta, as we see on the right-hand side, could be the number of contracts traded on the offer minus the number of contracts traded on the bid, yielding a positive number if it's a positive delta, or which is arguably bullish, or a negative number, which is a negative delta, which is arguably bearish. Okay, Chris asked, is there a way to see both on the same candle? The answer is no, but that's where that column 2 comes in. So if you wanted to see both pieces of information, you could, but you're going to end up with extremely cluttered charts. And again, I'm not even going to demonstrate it. Okay. Tom says, is there a lot of spoofing going on with these numbers? Well, Tom, the difference between this and depth of the order book is these are trades that have actually occurred. These are not just orders that are waiting and then canceled. So the difference between market depth, like what you see on the dome, versus this, which is what we see on the chart, is that these are trades that actually happened. So this is not like someone putting in a 500 lot and then canceling it 1 second before, you know, the market hits it in a disingenuous attempt to fool the marketplace, which is, by the way, illegal. But these are trades that actually occurred. So usually when you hear the term spoofing, they're not talking about trades that happen. They're talking about someone placing orders and then canceling them really fast to fool the marketplace. Okay. All right. So, okay. So let's move on. Now, the other thing that I want to mention as well is that sometimes people look at this type of data, but they like to look at the data in a way that doesn't change the structure or appearance of the chart. I fall into that camp. To me, when I look at these numbers, I see too much information. It already makes my eyes glaze over. But there are circumstances that exist where I think it is interesting or at least useful to be made aware when the delta is getting so extreme that it's crazy. And I'm going to show you an example of how you can see that information without changing the structure of the chart as well. All right. So if we actually, I'm going to duplicate this chart one more time. Okay. And just tile them vertically again. So this one's going to go on the far right side. Oops, sorry for the weird appearance there, but that's what this is going to look like on this kind of a time frame when we're this far zoomed in. I'm actually going to remove the numbers bar study and apply it. And instead, I'm going to add the study that's right 2 things below that says numbers bars calculated values. So numbers bars calculated values. If you click on it and then click the add button, you're actually going to get this grid that shows up at the bottom of the screen that basically shows the same kind of information that we might care about, except it does it for the entire bar and it does it at the bottom of the screen. So when I'm looking down here at this value here that says the ask volume minus the bid volume is -64, that is the cumulative activity of the entire bar, as opposed to seeing the data for each price like you are in the chart directly to the left. So personally, for me, I think there is merit in looking at the ask and the bid volume and the relationship with how the market is behaving, but I typically am not one to be looking at it on an intra-bar basis at each specific price level. All right, everyone's got an opinion on this if you're in the order flow camp. Okay, my opinions are largely based on performance of my customers, and all I can tell you is that I don't see a markedly different performance between people who trade with order flow analysis and people who don't. It just is a kind of an advanced thought process, and it's pretty cool. All right, but that doesn't necessarily mean it's going to solve the issue that you have. You could also argue, in fact, that it could do the opposite, because it's just showing you so much information, and a lot of times you're hearing me preach against that, in these sorts of presentations. So in an effort to keep things in a concise manner as possible, I a lot of times will use that numbers bars calculated values study, because there are a ton of inputs available. You can have all kinds of different aspects of the bar and the bid and ask volume at the bottom of the screen without actually using a numbers bars chart. Okay, now let's go back to, let's actually start. I'm going to keep this file as is, and I'm going to open up another chart book here, and we're going to talk briefly about the mechanics of like visually making adjustments to the way this chart looks. Okay, let's spend a couple minutes going through some basic settings. So we're going to move into another chart book here. This is the one that we just made that's got the bid and ask volume separated. Okay, so right click and go to studies, and what you'll see is in the settings section, if you scroll all the way past all the column 1, 2, 3 stuff that I was telling you sort of to forget about, everything past column 1 for now. And we're not going to really talk about this pullback column here. That's pretty well documented on Sierra's website. That would be an entire presentation in itself. But you will see there's a whole bunch of other choices about how you can make this chart look a certain way. So things like font size and other aspects here can be adjusted. Let's go through a couple of those. Okay. One thing that people do ask about a lot is point of control. So the point of control, do you want it highlighted or not? So the point of control is going to be the price at which the majority of the volume has traded. So as an example, if you go to highlight point of control and no columns, you're going to see some options for column 1, 2, 3. Remember, we're ignoring columns 2 and 3. So really only column 1 or column 1 with extension line until future intersection. We're going to touch on that in a second in another context. Normally, the only time people will do this is they'll do it in column 1. So when you click apply, you're going to get this yellow line by default around the price at which represents the point of control. Okay, point of control. So you can change that. Okay, you can also change the width of the line. Okay, that's right here. It defaults to 2. As an example, just to show you a visual response, if I were to change this to like this magenta color and just thicken the line up a little bit right here, you're going to see that we start to see a magenta line on each bar. Oops, sorry, I just clicked the help button instead of apply, like this. Okay, so now we're seeing the point of control at each price or in each bar. All right, that's one thing that is commonly asked. The other thing that's kind of confusing about numbers bars, unless you make some changes, is it's kind of hard to tell. Like, you can't really tell by looking at this where the wick of the candle is. Okay, a lot of times when people are interested in market analysis and candlestick charting and so on, they're looking for those wicks because you're looking for rejection and acceptance and that sort of thing. You have the ability to put open and close markers in a number of different styles. So there's the open marker and close marker, which you can see are currently not being displayed. It says no columns. So if I just change this to column 1, remember we're ignoring columns 2 and 3 for now, for the open and close marker, and push apply, okay, we're going to see open and close markers. So like this is the open marker, this is the close marker. This is the open marker, this is the close marker. This is the open marker here, this is the close marker. The thing that is interesting about looking at it this way is that you can infer by the location of the arrow what the wick was. So if the open is here and the close is here, you know that everything below here is the wick. All right, but that's not enough for a lot of our clients. A lot of times that's just not enough clear visualization of where the wick was. So if you want to make adjustments to the way the open and close marker is displayed, you can do that from this little field right here that says arrows on price. So right now it defaults to arrows on price. There's lots of other ways to do it. One way is the vertical bars on price, which kind of is the same thing. I don't think very many people use that. The other one are called open to close boxes, which are a little bit different because you actually get, here, let's make these colors a little bit more pronounced here. I'm going to use blue for this one, and for the down ones, let's use this light blue color here. So like this. So this is like, if you use the open to close boxes, this here is the body of the candle. Okay, and everything above where that blue is, this is a wick. And same thing down here, this is going to be the wick. Okay, So that is for an up bar, and then this is for a down bar. That's not a great color. Let me pick something different. Let's just do black. So for a down bar, you get this behavior here. So here, these two black things, everything up here was the wick, everything down here was the wick. Okay? So if you prefer to do it that way, you can. I would say that that's probably also not that popular. The most popular way of displaying this is the candlestick outline. Okay, candlestick outline, if you select it, it actually does show you the full candle. Okay, it actually shows you the full candle. You can see it in here. So it actually puts it right in between where the prices are. So a lot of times what people will do with this is they'll actually just make them both black. Okay, they'll make them both black like this, and then you rely on the color of the upper the red or the green to determine the direction. So this is another way of doing this. Okay, as we continue to scroll down, you'll see that there are some other choices to look at graphically. Okay, if you only have a single piece of text in the bar itself, that's where this alignment option comes in. That's like if we were only showing the volume. Right now it's defaulted to right. It's not being used right now because we're using two values, so it's centered. You also have the ability to separate the bid and the ask volume using a certain separator. The numbers bar separator character defaults to this little like hash mark, but you can also change it to something else. For example, if we were to use an X like this, okay, you can use an X like that, or there's also, there's a number of choices here like this, for example. Okay, so there's going to be a lot of personal preference in here, just like if you were, just like any other aspect of Sierra. Okay, you also have the ability here to adjust the font sizes, which default to the same chart as the font size itself. All right. Oops, sorry, I turned off the screen there for a second. Sorry about that. Okay, so if you see the same as the chart font, you have that ability here. You can also set custom fonts as well in these two fields below. I'm going to leave mine where they are, but if you want to make adjustments, you can make adjustments here. Okay, the stuff with the pullback, I'm going to leave that, basically off for now. Okay, because we're not really focused too much on the pullback. And then there's a whole bunch of other features in here. This is where things get really, really intense. But I would say that the one thing that people do ask us about is I made a comment earlier about this non-zero bid or ask volume and how it relates to an extension line. So one thing that people do look at when they're looking at these numbers bars is they're actually looking for what they call an area that is an unfinished auction. Okay, has anybody heard that term, unfinished auction, before in the context of profile or numbers bars? The word auction is used a lot in the marketing material, from the educating community, because it lends credence to the idea that this is legitimate. So one thing that a lot of times people will do is they will look at this option that says highlight non-zero bid-ask volume at the high or low. What you will notice oftentimes is that at the top of the bar, you have a zero, okay, a zero ask and a a zero contracts done on the bid and 7 contracts done on the offer. So in theory, what this means is that this price was the bid, this was the ask, and somebody hit buy market. This is possible. I don't know exactly if this is what happened here, but someone would hit buy market for 7 contracts. And then that was all the activity that occurred in this 5-minute candle at this price. So that basically means that in the eyes of the order flow trader, that this auction has completed. Sometimes what you'll see areas or candles where the bids and the offer volume doesn't have a zero. And so Sierra put out this option here that says highlight non-zero bid-ask volume. And what some people will do is they'll put it in this section here that says column 1 with extension line until future intersection. Because what this does, and watch what happens when I push apply here, okay, it actually puts a line out until the future to give you a visual notification that according to, auction market theory, I suppose, that this is an unfinished auction. meaning there were still contracts being, that were waiting to be executed here that were left untouched. So some people will choose this. It's one of the few settings that I change that's kind of below where the font size stuff that we went. I usually don't go into a lot more of this, although you have the ability to do that. But here where it says column 1 with extension line until future intersection, this is something that a lot of times these order flow traders will look at and they'll say, the market is going to return to this area, kind of in the way that someone who trades like a gap fill strategy might say, the market has to fill the gap. It's going to come back down there. Maybe it will, maybe it won't, but this is something that people, tend to look for. So column 1 with extension line until future intersection it gives you the ability to basically draw a line when there's an unfinished auction at a specified price. All right. I myself have found plenty of times where the market doesn't come back to these prices. I remain skeptical. All right. Someone prove me wrong or prove this viable, and I'm all ears. Certainly would be happy to listen. All right. So when it comes to building the actual numbers bars study, I usually don't get that much more complex than this. When I look at this chart, I see too much information. I do not get a lot out of looking at this chart in this format. What I do think is kind of interesting is when you have these extreme levels inside of a candle reached, because usually there is a flurry of activity around those price levels. And that might be because there was just a big, hedge fund or something that's trading a lot at that price. It could be, maybe it's right on some, very obvious Fibonacci retracement and the whole retail trading community is putting orders in at that same price. Maybe it's the top of the value area of the day or the bottom of the value area or anything. So one thing that's kind of neat that you can do is you can tell the chart to only display those colors when relatively extreme levels are hit. So if you find the color scheme like maddening, like I did the first time I looked at this, don't forget you can actually change the color scheme itself. So what I'm going to do here is leave this one intact and duplicate this chart, tile them next to each other. As you can see, I do this all the time. I always like to duplicate charts before I mess with them, because in case I break them so badly where I can't go back, I could just close the one that I messed up and I still have my original. Okay, that's a tip of the day from Patrick. But what I would do here is right click and go to studies, and you can actually get rid of these other comparison columns. So if you are not interested in seeing these other colors and you really only want to be alerted visually when there's like a relatively extreme number of trades or contracts traded relative to the bar, then you can actually just change these to a white background. So a lot of times what I'll actually do is for the column column 1 ranges, other than the highest one, okay, we can actually change these to a white background like this, one by one. Okay, kind of like that. Okay, and when you look at this, you're seeing, to me, you are immediately seeing way less data. You're seeing way less data, and that's just because you're just not, it's not this color thing. To me, I think it can be very overwhelming. All right, and this way you're only seeing these levels that are of relative import. Okay, one could argue. The other thing that you can do is you can increase the comparison thresholds. So the comparison thresholds for column 1, 0.25, 0.5, 0.75, this is a relative measure of like a percentile. So if you only want to see the most extreme behavior, you could actually increase the number. Let's actually duplicate this and I'll show you the difference. Let me duplicate this one more time, tile them on the screen. Oops, wrong tile. Tile vertically. Okay, so now we've got these two on the right that are the middle and the right that are identical, right? So what you can actually do is in the comparison threshold area, which is right here, think of these like percentiles. Okay, if you only want to see the most extreme price levels relative to other price levels inside the same candle, you can increase the compare threshold on the third compare threshold, because there's 3 ranges. So if I were to apply this, what you'll see is something changes. I'm going to change this back to 7.75 for a second. All right, when we change it back to 0.75, notice that this one stays, okay? But this one is basically, when I go to 90, or let's even go to 95, what it basically means is we're gonna lose anything that is not in the 95th percentile in terms of number of contracts traded at that price. So we're seeing way less data. We're only gonna see the most extreme events. Now on a 5-minute chart at 3:40 in the afternoon, it's not that, it's not incredibly interesting. But if you're looking at, say, if you're an active day trader and you're looking at, say, 1 or 3-minute charts, and you're looking at it, 15 minutes after the open or 30 minutes after the open, you probably are going to see more extreme values. Okay, let's actually look at that briefly. I will make a new chart book, and let's copy one of these, in this case, this extreme one that I mentioned, into this new chart book and switch to it. And I'll just maximize it on the screen real quick, like this. And let's just go to a 1-minute chart. Okay, so yeah, I mean, this is, so let's actually scroll back to earlier today. So here is right around the open. So this is a chart that I'm willing to bet a lot of you have seen in the emails that get blasted to you every day, right? You've probably seen something like this. This is a good example of how somebody can build something like this inside Sierra without having to drop a ton of dough. All right, this capability exists in our program without you having to spend money. Again, if you want to get really far into it, yes, there are some really nice add-ons that work for Sierra. A couple of them, we can put in front of you if you have questions or are interested. But don't feel like that's the first thing you have to do, like a lot of other programs. All right, so this is an example of the activity that you might see, right after the open. And so what the chart is basically displaying to you is much less than you would see on, something like this in terms of colors. Even though we're getting a lot more data, the prices are being highlighted in real time. It doesn't happen after the fact, only on the bar close. It will happen in real time, and these numbers will change. So as the market is moving and volume is accumulating, these numbers will change in real time, and hopefully give you a good representation of where the activity is in terms of the bid or the offer or the price level in general. All right, so this is a pretty neat looking chart, and to me it's a good representation of what an order flow chart typically looks like. All right, now what I would like to do next is go to a simpler example. Okay, something that speaks more to what I was talking about before, about looking at this data on a more per bar exercise rather than at each individual price level. And that goes back to what we were showing here with the numbers bars calculated value study. So I'm going to do another chart book here. We're going to copy this one into it. Switch to it. All right. So when you have this study on the chart, let's go to a slightly bigger time frame, like 15 minutes. All right. So this is a numbers bars calculated value study on a 15-minute E-mini S&P chart. If you right-click and go to Studies and click on the Settings section, just like you were going to be editing any other study, you will see under the Subgraphs tab, there are like 50, I think, 50 some subgraphs that can be added. The only ones that I have visible right now, you can see the draw style says visible, whereas on everything else it says ignore, are the grid lines, which are optional. Okay, my grid lines, so you can see the grid lines in between, each value, and if you have more rows, which we'll show you in a second. And the ask bid volume difference, which is the most common thing people look for and therefore is first. Okay, so if you just want to see the ask bid volume difference, you just change the draw style to visible. And then when there is an opportunity for a value to have positive and negative values, you will see 2 color options. So the green one is for ask volume, and then the red one is for a positive value, and the red one's for negative value. And you can see the coloring is based on this drop-down menu right here. So if, for example, I wanted to look at the total volume traded, the ask volume and the bid volume together, I could just select that, change the draw style to visible, and then in this case, I'm not really looking for a green or a red number because it's just the total number, and just push apply. And you can see now, in addition to the delta, I also see the total. So this is a way for you to track visually without having to use a volume study or have to have the numbers bar study on. You can see the total number of contracts traded in each bar. All right, so while this does not show a graphical representation of what volume looks like, which is what most people are used to, one thing is pretty cool is you can refer to these values when you create your own custom conditions. So here's an example of a custom condition that I might be interested in displaying, okay? Let's go to a little bit of a shorter term chart. Let's actually a much shorter term chart, like 1 minute. A lot of times when people are using order flow style, in their trading, these are people who tend to be trading on a shorter time frame. Okay, I don't typically see people looking at a 60-minute chart, and using order flow. But what you might want to look at is find a time frame that suits you. Find a time frame that you typically are looking at. For most of you, that's going to be something that is way shorter than it should be, which is probably why you're over trading your account a little bit, right? So if you're looking at too short of a time frame and getting too many signals, step one is to increase the time frame a little bit and decrease the frequency with which you trade, which is probably going to be better for you in the long run, all right? But aside from that little mini lecture, find a time frame that works for you. And let me show you how you can create a sort of condition that could visually demonstrate to you when there's a dramatic imbalance between the bid or the offer in terms of volume. So here's an example of how to do that. I like to use a study that exists within Sierra called the color background based on alert condition study. So you can color the bar, you can color the background. I like to use the color, you can do other things too, but for this example, we'll use the color background based on alert condition study and just add it. And unlike a moving average or some other study, we have to give some instruction as to what this color background is supposed to do and why it's supposed to do it. So if you go to settings, the first thing you'll notice in the subgraphs is the color. Okay, I'm going to change this color in this case. Let's do we're going to be looking for a bullish scenario. So I'll do this bright blue. Okay. And in the alert tab, this is where we're going to put the condition. Now, this is where things get, I'm not going to say complicated, but they will get intermediate to advanced with the use of Sierra. Sierra is a beautiful program because someone who's not a programmer can still write conditions without having to learn some programming language. I have no development background whatsoever. If I can do this, anybody here can do this. I firmly believe that. You just have to learn a couple of very basic operators: greater than, less than, greater than or equal to, less than or equal to. You have to know how to use a comma and a parentheses. And then there's a couple of operators like and, or crossover. Okay, there's not much to it. It's just very, very basic. 99% of the errors that people send me when they're trying to write a condition and they can't figure out why it won't work is because they forgot to put a closed parentheses on the end. It's not because they didn't learn the programming language. There is none. All right, so don't be intimidated by this. Anybody can do this. Okay, I really believe it. All right, here's an example. Let's go to the numbers bars calculated value study, and we are going to make a mental note that this is ID study number 1, ID 1. You can display ID 1 as ID :1 as it is displayed in the header. You can also do it as ID 1, just ID 1 with no colon. Okay, it doesn't really matter. I don't know why they make it optional, but whatever. If you go to the subgraphs tab, you will see that every study has a subgraph number. All right, here's the difference that we were looking for, right? The delta between the ask volume and the bid volume. ID1 period SG1. That's how we're going to refer to this. ID1 period SG1. When we use that phrase, the charting software is going to know we're talking about study ID number 1, the numbers bars calculated value study, and it's going to know we're talking about what subgraph, everybody? Subgraph number 1, right? The delta, the difference. So you just have to be able to put the study and the subgraph together in a way that the charting program can interpret it. Right? It's not that hard to do. ID1.SG1. Other studies have way less subgraphs, okay? This is a unique study because there's 50 some subgraphs to pick from. If you're just adding a moving average, there's only one subgraph because it's one line, right? If there's a volume study, there's really only one subgraph. If there's a MACD, there might be a couple, right? The MACD moving average, the histogram, and the zero line. So every study is going to have different numbers of subgraphs. The point is it doesn't matter how many there are. You just have to know which piece of the study you care about. And that's what we're going to show you here. So let's say that in this example, I would like to be notified when this ask bid volume difference is dramatically positive. And I just have to pick a number of what that means or some kind of multiple. All right, let's show you how to do it. So ID1.SG1. So we're going to go to the color background based on alert condition. We're going to go to the settings section. And in the alert tab, I didn't hit apply, so this color didn't take. So I'm just going to choose it again. And then in the alert tab, we're going to say something like this. Okay, we could say ID1.SG1. is greater than, let's pick a number. Let's say 3,000. Okay, this means we're going to be notified. Oops, excuse me, 3,000 there. We're going to be notified whenever this number is greater than positive 3,000. So if I push apply, we may or may not see any visual response. Okay, there's no visual response when I push apply. Why? Because if we look here at the bottom, we don't see any numbers that are greater than 3,000. If we scroll back, we might see some. There's one. Okay, there's one that was positive 4,070. Okay, so there's an example of a delta that is dramatically positive on a 1 minute time frame. So that means there were 4,070 contracts traded on the ask than on the bid. On a 1 minute bar, that is relatively extreme. And it's not surprising that it happened right at 9:30. I don't know what day this was. Maybe was that today? Oh yeah, well, actually it was today. So yeah, not surprising at all considering what we've been seeing. All right, now if you're not getting enough signals, or if you feel like you're filtering out too much, you can always reduce this number. Okay, we could say greater than 2,000, like this. Okay, now we're seeing one here. So do you oftentimes see continuation when, that's kind of the next question. Wow, is this the magic, bean? You will often see continuation after a dramatic delta, positive delta, but you will often also see the market reverse violently afterwards. And that is kind of at the heart of why this is a lot more difficult than just using this red light, green light type thing. All right, we're going to talk about that in a minute. But before I do, let's actually duplicate this study. All right, duplicate it. I just duplicated it by hitting that button. And then let's flip this to less than negative 2,000 and change the color. Okay, just what we talked about. I didn't actually plan this, but this is an example of why this is not the be-all end-all. So imagine that you're looking at your 1 minute chart and you're looking at it in real time, and you all of a sudden see that this market is breaking lower and you decide to sell it. What happened immediately after, within 2 minutes? Okay, we see a significant rally. The problem with looking at this on its own is that it is very difficult on its own to see what is commonly referred to in this type of analysis as absorption. There are a million theories as to how somebody can correctly display absorption. Absorption would be a situation where the delta is getting increasingly negative, but something is meeting the selling. So if you see a dramatic move lower in terms of the delta, but the market is not breaking, that is bullish, arguably bullish. Because if you see a dramatic delta on a really short time frame, and sometimes we've looked at this at 10 seconds, 30 seconds, just for fun, just to kind of see how granular can we get. You will often see situations where the market, the delta is extremely negative, but either no one's jumping on board with whoever is doing this or whatever is doing the selling, or something is feeding orders into the market to meet the selling. So it's very difficult to discern that in real time, especially on a short time frame with the limited resources that retail traders have. I mean, how do you detect that? That is at the root of the problem with this style of analysis, is that, okay, yeah, the delta is way positive, that's bullish, but wait a minute, and sometimes it's not bullish. It's very rarely as simple as that explanation. That is something that I think everyone who looks at this style of analysis should be aware of. There definitely will be situations where you will see continuation after something like this happens. One thing that's kind of cool about this is that you will see this happen in real time. That's also dangerous. Okay, here's why. Let's say that this market is rallying, okay, and the market is up here, here. Let's say it's getting right up to this area. Okay, it's getting right up to this area. And then you start to see this flash blue. So you know that you are over 2,000 contracts positive on the delta, right? But what if then some automated sell program comes in and sells, 5,000 E-mini S&Ps over the course of 2 minutes or 1 minute, let's say. Well, this was blue a second ago and now it's going to be red. So this is actually happening intra-bar. These values are going to be changing as the market is changing. So the first time you see a blue flash on, yes, the delta is positive for that moment. It doesn't mean it's going to be positive on an ongoing basis. All right, it just means it's positive at that moment. So sometimes when people are looking at this oversimplification of order flow, they will only look at it at the bar after the bar closes. If the delta is positive on the close, okay, then you add that into the other reasons why you should be getting long. Okay. So something to think about. The other thing, Arthur had a question. We're out of time to demonstrate that today, but maybe what we'll do is we'll continue this order flow discussion next Monday. We really should. Is Arthur suggesting, could you overlay, say, a condition of like 20,000 or something, on a bigger time frame, and overlay that condition onto a 1 minute chart? The answer is yes, you could do that. You could actually have them both displayed. So you could have, a plus 7,500 delta condition from your 5 minute chart or something, or 10,000, and then you have that color condition being overlaid onto the 1 minute. At the same time, the 1 minute is also showing you a certain result. So you're getting sort of confirmation on two different time frames. It is possible. Yeah. In fact, that's something we could demonstrate next week. So, folks, I think that's probably where we will leave it for now. This is a very small sort of delve into this style of trading or this style of analysis. And I would like to actually continue this with some more, granular and more fun examples. So hopefully this is still worthwhile. I would like to make these chart files, like I mentioned, available. What I'm going to do is title them in order that we open them here. So you can watch them along in conjunction with the video. And then you can actually use these files on your own computer and, hopefully follow along with the recording that we'll have on YouTube and on Charting Club. So listen, again, I know it's a large amount of information on a relatively abstract topic in a short period of time. I'm not a indicator salesperson, so I don't really have a huge bias towards or against any particular type of analysis. I just want stuff that's simple, that my customers can understand, that I can understand. And I think what's really cool about these sorts of events and all the new stuff that's coming out with the charting is that a lot of times the people who build this stuff and the people who have these ideas, they have such complex ideas, and so there's so much interesting stuff in there. But it's like, how is a regular person in his office at home going to make sense of this? What can we pull out of this? And what I usually find is that even as these analysis techniques get crazier and crazier in terms of complexity, there's usually something that we can pull out of it and make it simple and usable. And that's kind of what I think I have been able to do with this calculated values function. Is it takes a very common and very interesting idea, which is order flow, but it puts it out onto a bigger time frame because you're looking at it on the whole bar, not necessarily at a specific price level, which discourages over trading because you're not getting all these signals intra-bar. And that's usually, one of the problems that we have with our clients is their interest in clicking the mouse too much. All right, so maybe this is an opportunity for you to take some useful concepts and widen them out onto a time frame that suits your personality and plays into your strengths rather than your weaknesses and desires to submit to instant gratification. Okay, so that's the idea. Hopefully everybody got something out of it. I do appreciate it. I'm going to close the room in a second. We will have this up on YouTube and in the Charting Club website within a day or so. Anybody who wants a copy of the files, just email your representative in our office, whether it's me or whoever, and we'll have them all to you at the worst case scenario early tomorrow morning. And I want to thank everybody for your time. So thanks so much. I will continue this discussion next week, and I'm going to read some risk stuff, and we'll close the room up for today. Again, thanks everybody for coming. It means a lot. Oh, another thing. There's a really good intro to numbers bars that I built. If you want to watch it, it's on YouTube. That's the link I just pushed out here. If you would like to, this I opened by mistake. If you prefer documentation, and miraculously, a lot of people do, and even I have gotten to the point where I can appreciate it as well. This is one of the most efficiently and effectively documented studies on Sierra's website. So if you would like to read the documentation, all the specifics of every single choice that's in here, the link that I just posted will take you to a place where you can do that. So the two links, the first one's a YouTube link to something I made a long time ago that talks about the initial setup of the numbers bar study. It highlights some of the stuff we just talked about. The second one is a place where you can get documentation actually on Sierra's website about this specific study, including every single thing that they've got in the settings and input section is all documented and explained. So if you prefer that, feel free to to take a look. All right. Okay, folks. Thanks again. Much appreciated. I'm going to read the risk disclaimer. We will see you next Monday. Please refer your buddies and your trading friends to us. It means a lot to us, and it means we could do more webinars instead of make more phone calls. All right. All right, everybody. Thank you. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Thank you again. See you next time. All right, folks. Thank you.